Hello! I bought shares in RedFin Corporation during the dip in 2021 and received a 95% return on my investment. Wait, hold on. That's a negative 95% return on my investment. Yep, that's right. I'm going to show you how to lose 95% of your investment with this one simple trick. Before we get started, I need to do a disclaimer that I am a CPA, but I am not your CPA. Please do your own research before making any of your investments or decisions. Okay, stepping back in time, during the January 2021, the general markets were in a bit of unease with the new president in the United States. People were holding off on making major decisions like buying a new home. Also during this time, Zillow ceased to offer buying new homes and instead opted to dump homes onto the real estate market. For many reasons, including these, real estate markets plunged and real estate companies were punished by the stock market. At the time, there was one company that was doing everything a little bit differently. That company was RedFin Corporation. The business model of RedFin was to remove the unnecessary costs of the home buying process. RedFin did charge a flat rate for buying and selling homes, but this was often a fraction of the traditional realtor costs. Redfin really shined when it came to real estate data reporting analytics into an information company in the real estate market. Additionally, Redfin intentionally stayed out of the direct purchasing of homes like the competitor Zillow, who didn't actually fare very well. Lastly, mortgage rates continued to be at historical lows, and there was strong hints of another round of stimulus payments from the federal government in the United States. All in all, Redfin was temporarily undervalued by the stock market. As a result, I waited until there was a dip greater than 10% and I bought 11 shares of Redfin at $90.03 a share. At the time, I thought I was getting a discount. Okay. Fast forward to today, October 9th, 2022, and I can say that I goofed up. Redfin is currently trading at $5.20 a share, and I'm sitting with a 95% loss on my initial investment. Redfin doesn't pay a dividend, so there wasn't any return of my capital investment. Okay, so conclusion, where are we going with this? I'm going to hold my Redfin investment for the long term. I don't anticipate buying more shares as the housing market is very grim right now. Mortgage rates are nearly 7% with the federal government hinting at additional rate hikes into the future to calm the inflation fears. I don't anticipate selling my shares as Redfin is truly a data company that happens to be in the real estate market. As always, like I say before investing in any of the stocks that I talk about, please do your own research and due diligence and come to your own conclusions before making any decisions. Okay, everyone, that will wrap up today's video. Thank you for watching. Please like and subscribe to Med City CPA. Thank you.